because the U.S. is closed for the 19th holiday. It's a new federal holiday here in the U.S., so we have pretty quiet action. I thought I'd take advantage of the quiet action to do a little teaching here and talk about some of the correlations that I use when I trade FX. Let's start with the euro. So the euro, what's important to me when I trade the euro, and this is a new correlation that I've found lately, is the gold-silver ratio, which tracks the dollar. And since euro is a big part of the dollar index, you can see that it also tracks, you had euro going down, going up, and that's when you had gold and silver ratio coming down in a pretty big way, right? And now we're trying to bounce in this index right here, but I don't think this is the bottom of the gold silver ratio. So that's one of the important things that I pay attention to. I also pay attention to yields. You have to, and I've been trading yields pretty good. TLT told people to buy the test of this wedge line. And then once we started to, and then this pullback here as well, and now we have a breakout. I'd be, we're not trading today. I'd be trailing stops under 93 because if it negates a breakout, there should be a pretty good break to buy. But I'm pretty bullish on TLT. In fact, I'll make a couple of macro calls that I've made before when I look at the monthly on TLT. As long as these lows hold, I believe that they will. I think there's a chance for initially just to take out these highs from last December, from the October low, would put us over par. But if I look at potentially what could be happening here is we could get a huge bond rally back towards these moving averages on the monthly are about 120. And, if you look at that, is that the beginning of a new bull market? I say no, but it's one heck of a bear market rally. In fact, I haven't put the fibs up on this for a while, so let's do it together. So let's just look at fib retracements from the top of the bull market up here. Let me scrunch it a little bit so I get up here. So here you go. This was the top that we had in right around COVID. That's when rates went, they were down below 3 for mortgages. And so let's call this a low. I know this isn't a correlation, but I wanted to show it. And look at what you have. At 120 is just a 38% retracement on the monthly. So we could, have people moving into the bonds, and this is still a huge trade. If you get long in the 92 area, that's still a very big trade. There'll be stops along the way, like 105, but this is a possibility. It almost makes me think that we're going to start to price in slow growth, maybe even a recession if we're going to rally up to there. So again, you have to pay attention to rates when you're trading all the currencies. It's relative in strength. So let's get back to what I follow in the when I'm trading euro. So to me, euro, it's also very important what euro pound does. Okay, so euro pound, that's a monthly, we're at some major support. Maybe we're going to break down, but let's take a look at what I was paying attention to more in a micro way on a 4-hour chart. And we got up to resistance here and we're pulling back. The question to me is, do we just pull back for a right shoulder, or is there one more flush down to new lows? And the reason I follow this is for what's my preferred long, what's my preferred short. When euro pound is going down, euro's your preferred short. And when you think the dollar's going to give up some ground, you don't buy the euro, you buy cable. So I'm looking for a bottom in EG to set the stage, because it is my contention that most bear markets in the dollar, the euro should outperform the pound. So, we've had the dollar moving mainly sideways, but the euro has been underperforming the pound. So I'm looking for a shift in that. Same when it comes to cable. I don't have any other outside markets that I really pay attention to. But that, as I look at this weekly 200-week moving average, which is what the cable tagged last week before coming off, should we take out this 128.5 level, we're definitely going to be taking out these size stops over 131, 132, and probably making a move up towards 35 or so. The Aussie, you have a few different things to follow when you're trading Aussie. First, similar to Euro Pound for your preferred short, I follow Aussie Kiwi, and you can tell looking shorter term, we put in a higher low there. That's a weekly. Here's a daily. Nice little pullback. We're on our way back up. And for a true bull in the Aussie, you want to see the Aussie outperforming Kiwi. It's been doing that since February with this little pullback. And this looks like 108 was a breakout. And as long as we're holding 108, we could look for these highs to be looked at. The other thing is copper. Copper, which is that's not the copper. In fact, I don't know what's happening here, but I'll change the copper chart. But you pay attention to copper because it's highly related to China. Okay, so you also follow the FXI. A lot of people used to correlate it with gold. I think it has a bit, but copper's more of an industrial, and also economic growth in China is also important for Aussie. They do trade a lot together. Let me move on to US dollar yen. US dollar yen has a fairly tight correlation with yields. So as yields drop, normally US dollar yen will go down, which means the yen would be strengthening. And here we have the recent move. You could see that up until this last drop in yields, we had this drop here in yields, and we had this drop here in yields. So the yen at times detaches from this correlation. But if I'm right about where long-term rates are going, and here's your 10-year weekly. And again, I'm making a big call on this because I don't think many people are very bullish what's happening here in TLT, that we're on the verge of a breakdown here under 420. And, I alerted you, this was 78.6 back of this. Then I alerted you on this weekly candle that this was 78% back of this. And now we're on the precipice of a breakdown. And this measured move was a pretty big 502 to 378, I believe was the low there. 378 it is. So there you're talking about 34. So 34 from here is going to give you 430. We're already there. I'm talking about this move, 502. That's 140. So 140 from 470 is 356, which is underneath this level. And then if you get some type of fib extension on this decline, like say 1.618, could actually be talking about a 3% 10-year down the road, maybe even quickly into the fall. We've had some tame inflation numbers. We've now the missing piece of the puzzle to finally get the bipolar chairman of the Federal Reserve to start talking more like a dove would be some weak employment numbers. That would be the next piece of the puzzle. So lower yields are jet fuel normally for S&Ps. Usually means a weaker dollar, means stronger metals, less competition. So you have to pay attention to yields. And if my call is right, I'd be very surprised to see a stronger dollar and weaker gold in this environment. And that comes back down to the yen being correlated to yields. That if I'm right about where the 10-year could go, I think 144 or so is a very conservative call for what the yen could do. So looking for the yen to be peaking here because of what yields are doing. I don't believe we should take out these highs over 160. We're over 200 pips away, and you have a couple of nice little channels to be paying attention to in this uptrend. And they both seem to come together at about 156, under 156, 150's next stop. Canada, you guys know that I'm bearish Canada, that it's my view that what we've had here in Canada has been this huge sideways action since what month is this? October of 22. So, it's a year and a half of range trading. Uh, the one piece of data that is not fitting my narrative is large specs are pretty short the Canadian dollar, which means they're looking for a higher USD CAD. So we'll see if I'm right or the large specs are right on this. It looks like distribution to me. And so I also pay attention to the CAD and its cousins, both the Aussie and the Kiwi. Right now, Aussie is doing better on the upside than Canada is doing on the downside. So Aussie's still the leader. The commodity currencies, I still think, are the best place to be. So long Aussie, short USD CAD, and correlation that used to work is when you're trading CAD, you pay attention to what WTI is doing, and the fact that we're trading up here, we put in uh, one. This is the second higher low, and that we could get a rally to test these highs out and be trading at 100 or better. That also, Canada being a major developer in the energy patch and producer and exporter, is also positive. When WTI is going to make a move like that, that should be supporting the Canadian. A lot of people bearish the Canadian economy because, unlike the U.S., they do not have 30-year mortgages, and a lot of people are, being stuck with rollovers after a huge parabolic rise in values in Canadian real estate. So that's one of the reasons people are more bearish Canada than the U.S. But I don't think a lot of people, since the markets ignore everything that's happening on a geo basis, which one day they won't. And I do think if crude heads up there, a weaker dollar could be part of it. That's going to increase the price of everything nominally because it takes more dollars to buy them. Uh, Economic growth, I don't know if we're going to have runaway growth anywhere. Even if China recovers, that could be runaway growth. So I look more towards the possibility of having supply disruptions. And we all know what's happening in the Middle East. So I wouldn't play, even if I wasn't bullish, I wouldn't play the short side of crude in this environment because you could be right for 3 days and then one event in the Gulf could create a huge move against you and leave a huge dent in your equity. So I'm not going in this environment trade the short side of crude. And now technically I like the long side anyway. So that covers most of the currencies that I'm looking at. Of course, we have S&Ps at new highs. We have NASDAQ at new highs. Another good week in NAS. Still no sign of a reversal. I will say though that the S&Ps, well, they're still diverging, but not as much. But here's the outliers. The outliers are the Dow, and I'm hoping there's still more of a parabolic move left in the market to take the Dow back up above 4,000 one more time to trade what eliticians would call an ending diagonal, all right, which Dale Pinker calls a three drives to a top formation. And that would take one more drive above it. And then I think we could see a pretty good break, even if it's just a correction. But um, that's one of the outliers. The other outlier, of course, is the Russell. Russell has not made a new high, failed up there at 210. So I'm not so sure it can. It's really going to take a lot more juice. And I don't think a weaker dollar actually serves um, the small caps because they're domestic. I believe they do better with a stronger dollar. And then my three shorting candidates, which, the first one's a Dow if we get back up there for a three. The second one is XLF, which is a banking index. And we'll see if that could generate one more high over what are these highs, over 42 and a half. You'll see a massive divergence here. And then the last one is Amazon, which we'll see. It's struggling a little bit here, but you could tell by the RSI reading, even if we trade over this high for a third drive, 192, that's $10 away, that we're going to remain under 70. And then I know I'm wearing this is a Bitcoin shirt, right? I wanted to save the bad news for last. Bitcoin is rolling over, in my view. Could we get one more blast to clean out the bears over 72? I suppose so, but the action is starting to look like a failing rally here in Bitcoin. And my big call is sometime later in the year that we're going to have a chance to buy Bitcoin around 40,000. So that's going to be a pretty big break. Even if it's not as aggressive, and this is just an A wave for correction, and this is a B, and we get a C, that still could take us down to here. Let me just draw a quick line for you guys. And give me comments if you like these longer kind of tutorial videos besides just straight analysis. There you go. So that's still 50 grand. That's still about 14,000 lower if it's just an ABC. And that's going to be a wrap. So I hope you learned some things. It's in video form, so you could always go back and play it again and write down the things that you think might help you and you could integrate into your trading. And above all, my friends, don't just count your pips, count your blessings. If you're listening to me and you have the ability to trade with risk capital, you're in a lot better shape than people that have to make decisions between food, medicine, and rent. Always keep that in mind. There's always something to be grateful for. You can't be depressed and grateful simultaneously. If you don't believe me, try it. And Mike is busy. Today's posting a bit in the room. Uh, he has a meeting. He's in New York City, but I believe for sure we'll be back and be together for the Mike and Dale show at 11 a.m. EST. It'll be time for Mike and me. So have a good day, nice holiday if you're here in the States, and I'll see everyone tomorrow. Adios.